Well, howdy there, folks, and welcome into tonight's video. So this is probably going to be the last video of the weekend here, and I thought we'd wrap it up with a good one. So my margin interest rate, I negotiated that with Fidelity about probably 2 weeks ago now. Got that down to 1.55%, meaning that if I want to take out, whatever amount of money with them, well, not whatever amount of money, but like, let's say I can at least take out $1 to $1. So let's say I have, let's say hypothetically I have $5 million in my main private account. I can do another at least $5 million on margin if I choose to do so, okay? And pay an interest rate of 1.55%. Now, this leads to the conversation we have to have around margin, my feelings around margin, when I think it is appropriate to use margin, who should be using margin, what interest rates you should consider using margin or not consider using margin, in everything across the board. And I'm going to tell you a story how I got myself into some trouble around margin many years ago. And we're going to cover anything margin related in this video. We're going to cover it, okay? So hope you guys get a lot of value out of this. Hope you guys enjoyed it as always. If you don't mind, smash a thumbs up for me for sharing all this with you guys. And other than that, I released 3 other videos on the channel today, so if you didn't get notified for any of those, you can definitely check out those. But this is a big one, because every single person watching this video right now, you've probably thought about going on margin before and creating a margin account so you can invest more money, right? Or you're going to have those thoughts at some point in time, right? Especially if you do good in the market. For me, going in, it was like 2014, and I was leaving Quick Trip, and I wanted to invest more money at the end of the day. I had gotten amazing returns year after year after year after year, and I wanted to invest more money, so I opened up a margin account, all right? Now, I got in a lot of trouble with margin for 3 different reasons. I got into a lot of trouble with margin. I actually lost myself $75,000. So all of a sudden, I went from like being this profit machine in the stock market to 2015, I lost like $75,000, okay? And it happened like real quick. So there were 3 things that happened, okay? One is, at that time, I had no income. 0 income. My only income related thing was stocks, and that was it at that time. I had basically kind of retired. I had basically retired. I wasn't doing anything income related outside of stocks. So I was 100% dependent on just stocks, okay? And so in that situation, it puts a lot of stress on you, obviously, to try to get outsized gains. And then you have more time in your hands, so you start over trading and you start thinking you can do other moves. That leads into my second bad thing that happened to me with the margin, why I lost $75,000 that year, was I started like doing short-term trades. I was a long-term investor making long-term moves in companies and with a ton of success. But then, because I was going on the margin and I was starting to feel like, oh man, making a margin call, let me try to get 10K back right here. All of a sudden, like I would do some earnings trade or something like that back in 2015. And lose more money, and you start funneling the other way, right? And next thing you know, you got these margin calls, and when you have 0 income, and you're sticking yourself, you're getting into an over margin situation. It gets ugly, which leads into my third thing that destroyed me with margin 2015 was I was paying interest rate of 7% roughly. It was like between 6 and 7%, somewhere in there. I think it fluctuated. As I was losing money, the interest rate was going up, okay? You add all that in, and it's in a bad, ugly, horrible situation, okay? I mean, you're talking about super high interest rate, 6-7%. You're talking about, getting off the wrong way, starting to do earnings trades and things like that, going away from everything that made me successful in the market. And you add a situation where you have no income outside of stocks, it can get ugly fast. And that's how all of a sudden I went from being a super successful investor to all of a sudden 2015. I lose $75,000. And that hurt because at that time, going into that year, I maybe had like $200,000. So you go from, $200K and you lose 70, like now you've got to climb back up. And that's why I always preach to you guys, like it's not just about making money in the stock market, although that's always the goal. It's also about making sure you don't make any big mistakes and have a super bad year or something like that where your accounts go down, because now you have to climb back up. And I think it wasn't until 2017 that I climbed back up over 200K again and got back on the right track. So it took me a little bit, right? That's a tough situation, okay? Now, the moral of that story is, before we get into, if margin is right for you and my opinions on that and what I do with margin and things like that, the moral of that story is, don't go on margin if you have to pay a super high interest rate. Don't put yourself in any sort of situation where you're going to get margin calls because you're going too crazy with margin. And generally speaking, margin is not the best if you have to pay high interest rates, even if you have experience, okay? Never mind if you have no income, okay? Now, margin, okay? If you have experience, you've been in the market for many, many years, you have income, and you can get a super low interest rate, that's when we can at least have the discussion on it could be potentially worth your time to invest a portion of money on margin. Now, keep in mind, you still have to watch out for losses. And what happens if stocks go down in the short term you own? You might own a great stock for the next 3-5 years. Doesn't mean it's going up over the next 3-6 months. What if that stock goes down? What if it goes down a bunch in the short term? Okay? How's that going to affect your accounts? And so this is why you don't want to put yourself into situations where you are, 40%, 50% margined out or something like that, because man, all it's going to take is a market to downdrift or a few stocks you own to downdrift, especially ones you have big positions on, and next thing you know, you got margin calls. Now, if you got a huge income of, $1 million a month, great, okay, you're fine. It's not that big of a deal. You're just going to funnel more money in and things like that. That's super unrealistic for most folks, right? Most folks are making 100K or less than 100K per year. So if you're in that situation, you're making $100,000 a year or less than $100,000 a year, you have to be very, very careful. If the interest rate is over 6%, don't even consider it. Don't even consider it, okay? 4%, okay, now you can at least consider it. And the way I kind of think about this is, the market on average, S&P 500, goes up about 8% per year. Now you might say, well, I got 35% last year, so I'm getting way better. That's great, okay? I've gotten 30 to 40% returns pretty much every single year leading up until my margin year, and the next thing you know, it wasn't the year that it was supposed to be. Let's just put it that way, okay? And so you can't get too excited about returns you've gotten in the past, whether it be last year, the year before, things like that. Always keep in mind you can have a bad year. Everybody has a bad year, sometimes even a couple years in a row, right? Like everybody, I don't care how good of an investor you are, how much research work you do, everybody can have a bad year and everybody can pick some bad stocks, okay? So if you're around 4%, okay, maybe we can start having the discussion on maybe it's worth it because the market on average goes up 8%. So, 4%, half that, half of 8%. Okay, this is pretty intriguing now, okay? Now, when you get into under 3%, now things get real interesting, right? Now, when you get 1.55% like I have, I mean, we're talking, this is insanely low. I mean, we're talking about that's almost non-existent. Like, they're almost like I hope I can get better than 1.55%, right? And so that puts me in a little bit of a different situation where now I can say, if I want to invest on margin, I have that capability if I choose to do so. Like, let's say I don't have money in an account at a particular time or something like that, or let's say I got cash flow going to something else, but I see the stock over here that's a deal. But with always the context of, let's not make sure we don't go too crazy with this, because what happens if the market drops 10%? That can happen quickly, man. It can happen really quickly. Like, the NASDAQ could all of a sudden be down 10% in a matter of a couple of weeks, and the next thing you know, you're like, what just happened? What just hit it? You know what I mean? Like, it happens fast. The market can turn really fast. Particular stocks can turn really fast. This just happens in the stock market, okay? So what I would say is if you got the experience and you can get a, under 4% rate, it's worth considering, but with still thinking about, okay, what is my limit? And have a direct limit. Have like a margin call, but for yourself, essentially. So, the margin, you might not get a margin call from a brokerage until you're over 50%. Sometimes, they might not call it till you're 60% on margin or something like that, okay? They might not call it until that. Set something separate for you. Maybe it's 25% or 30% in your head. And be like, I'm not going to go over this number. If I go over that number, I'm either going to sell some stocks off or I'm going to deposit money in my account to get back under 30% margin or something like that. Like have a number so you don't ever get forced into that situation where in a brokerage account you actually get a margin call or something like that. That puts you into, a bad situation. A really bad situation. And I know, a lot of folks out there that love to invest in growth companies. It's great. And when it's going good, it goes really, really well. We all saw what happened with Tesla, right? Over the last couple of years, we've seen what happened to countless great stocks, right? Shopify and many others, right? Zoom. I mean, these stocks have been unbelievable. But keep in mind, growth stocks can fall the furthest, the fastest. I mean, like literally, those stocks can fall 30, 40, 50% in a snap of fingers. It's like boom, 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 boom. Any of them, it can happen. If the NASDAQ's down 10%, Tesla's down 30, 40%. If the NASDAQ's down 10%, Shopify's down 30, 40%. You know what I mean? Like this is what happens. If the NASDAQ's down 10%, Amazon's down 20%. So these are things to consider if you're going to invest any amount of money on margin, essentially, is thinking from this context of, well, if I'm investing in all growth stocks, these could easily sell off 20, 30, 40% in a rough market. Where is that going to stick me margin call wise? Am I setting myself up for a margin call and things like that? So these are absolutely things to consider. So, I feel like margin is set up more for people that have a lot of money and have a lot of experience and have big incomes. I wish I could have been had this opportunity many, many years ago, but now, I don't even really need margin nowadays, right? Because I already have a ton of money in my accounts and now they want to offer me 1.55%. It's not really as necessary, but a lot of the people that want to use margin are folks that are making under 100K a year and probably have under 100K in stocks. And they're saying they want to get to that next level faster. And they're thinking, man, if I just need more money, I just need more money to invest. And yeah, if you can get really low interest rates and you can keep your margin, let's say under a 25% level, okay. Be very careful if you try to take it over 25%, man, because I'm just telling you, the market switches quick, and the worst part is you'll be forced to sell stocks at really bad prices, and then next thing you know, you're selling all these stocks at really bad prices because you're getting margin calls, and then a few months go by and then everything recovers and you're like, oh, great, now I can't buy. So this is some food for thought, guys. So this is a video all about my opinions on margin. Hope this helps you guys out, coming from kind of my perspective. I did 3 other videos on this channel here today, so if you want to check out those, check them out. I heard they might not have sent notifications for one of them, so you can definitely check out those. Those are definitely some value-added videos. And much love as always, guys. Peace. Don't forget to smash the thumbs up. We do appreciate it on this little channel. Have a good night.